This is James, and you're watching Tixee Live. And a very good afternoon to all of you, and a very happy Monday. In today's program, I want to have a brief chat a little bit about how the UK is looking behind the sofa, behind the cushions, and under it, trying to find a bit of cash. And at the same time, a latest development with Meta or Facebook and Apple as well, making a recent announcement. But before, hello there. Hi, how you doing? Hope you're well. Thank you for coming. But anyway, before we get into all of that, don't forget, these little videos are for educational purposes only, and in no way whatsoever should be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. With that out of the way, let's get started. So it's been revealed today that the UK somehow needs to work out how to fill a 50 billion fiscal hole. 50 billion fiscal hole. Now, as you know, the UK has been in it's had a lot of tension over the last couple of months or so, especially after disastrous mini budget with their very short-lived PM, Liz Truss's what's called trust economics, which would put the market under so much pressure. And like I said last week in another video, I did say that they were hours away from complete total financial meltdown, which is scary. Bear in mind the UK is indeed a G7 nation. Now, one of the reasons why it was so dramatic, this mini budget which they revealed, is the fact that, like I say, the market knows for the UK needs some money, and they know the UK's in debt, but they didn't know they needed to find 50 billion. Now, Jeremy Hunt, the new Chancellor of the Exchequer, he's going to be revealing his new fiscal statement on November the 17th. Remember that, November the 17th. And he's going to try his best to restore confidence and stability in the UK market. Now, the Guardian newspaper, they suggest in this fiscal statement, will actually show a 35 billion cut in government spending and 25 billion in tax rises to try and fill that 50 billion surplus, which they desperately need. So anyway, it's going to be very, very interesting on the 17th. I don't know if it'll be as dramatic as the last mini budget we got, but like I say, Jeremy Hunt is going to really try to restore confidence, credibility, and stability back in the UK financial system. Something else, keeping with the UK as well today, which is, again, like I say, is not so good. The UK house prices have fallen at the fastest rate since February 2021. In fact, they were down by 8.3%. Now, a typical house in the UK now costs 292,598 sterling, that is. In September, just 2 months ago, they were worth, on average, 293,664 pounds sterling. So don't forget, with the Bank of England raising interest rates, it's having a big impact on the housing market. And I speak about housing market a lot. Reason being, it's because not a lot of people talk about them. Not a lot of people are talking about the housing market at the moment. But I really think in the not too distant future, it's going to become a big story. I really do think that in the long term, we're going to have a potential housing crisis in the United States, housing crisis in the UK, and potentially a housing crisis in Canada as well, but mainly the UK and the US, because of the way we're obviously raising interest rates. Higher interest rates, more expensive than mortgages. And bear in mind, we're already in a serious cost of living crisis as it is. This is just going to add to it. So it's going to be really interesting to see how this develops. Anyway, that's enough for the UK. That's enough, because I talk about the UK a lot, because let's face it, the UK has been in the headlines a lot, and the sterling has seen a lot of volatility. But I want to go back to the story I was talking about this morning about Facebook. As you know, what I said this morning is Facebook is anticipated or expected to announce mass layoffs maybe as soon as Wednesday. Now, not surprisingly, the markets reacted in the open by Facebook opening higher by 3.4%. Clearly, the market's seeing this as a positive because it's going to reduce their obviously operating costs. So this is where why Facebook has jumped up 3.4%. But let's have a quick look at Facebook now. And there's something else I want to talk to you about Facebook as well, which I think is actually quite scary. But anyway, let's just have a quick look at Facebook at the moment as it is. This is Facebook as we can see. As you can see, it did indeed open with a gap. It closed on Friday around $89.10, but it's currently trading now at $95.15. Opened around about $93.90. So a bit of did open with a nice little gap. But like I said, the market obviously seeing this as potentially good news because obviously it's going to cut its overall operating costs by letting a number of people go. So this is how the market is reacting to that at the moment. But something else about Meta, which I think could be a serious problem for them in the future. Also explains why they're going to have to do these layoffs. Because don't forget, a couple of weeks ago I mentioned how investors was telling Facebook they you need to cut your workforce because, like I said, they got 87,000 people are employed by Meta. But it turns out that Meta has lost investors this year, $211 billion. $211 billion. And this is just some of the big ones, okay? Some of the big ones in this pot, all right? Vanguard is down 44 billion. BlackRock down 37 billion. Capital Research and Management down 29.8 billion. State Street Global Advisors down 22.2 billion. FMR down 27.7 billion. And that's just a handful of them. There is more. But overall, they're down 211 billion. 211 billion. This is all down, of course, which I said this morning, the metaverse, which Facebook has spent now 15 billion in research for the metaverse. And like I said this morning, the main one has only got 200,000 subscribers. So it's not really taking off. So this is quite worrying. Like I say, okay, today Facebook has acted to the developments in a positive way. Well, actually, the share price has gone up. It's not positive for all those who are about to get laid off this week. But still, this is going to be quite worrying in the future. I'm going to keep a close eye on this story as it develops. Something else, Apple as well had some bad news today. Apple has said, okay, that they're going to cut, 3 million production, 3 million units, 3 million units on their phones. Of the new iPhone 14, their flagship phone. Reason being is, they're saying China delivery as well, because don't forget, China is not come out of COVID lockdown properly yet. That's obviously affecting production. But as well as that, demand for the new flagship iPhone 14 is waning. It's not proving to be as popular as they had hoped. So that, of course, is also putting pressure on Apple as well. And we'll have a look at Apple in a minute when we look at the market. Just want to end up with one more company because we got another. Don't forget, we're still in earnings season at the moment, and we have one company in particular I want to look at, and that comes out tomorrow after the market closes, and that's obviously Disney's earnings. And like I say, it's due tomorrow. Be interesting to see. If they're still competing or still beating Netflix. Excuse me. I do apologize. Be interesting to see if they're still beating Netflix for a number of subscribers. Because last time in their last earning report, they had overtaken Netflix. And don't forget, 2 weeks ago, we had Netflix earnings, which surprised a lot of people because it was very, very good. And they managed to also gain 2 million more subscribers. So it'd be interesting to see how Disney shows tomorrow. Expectation on their revenue, though, is around about 21.38 billion. So that's going to be something really interesting for us to have a look at. So probably talk a little bit more about that as we get closer to that announcement as well. Anyway, let's have a quick look at the market, see how it currently stands. Like I say, we're carrying on. We're piggybacking on the optimism we had on Friday. So we're still seeing a fair bit of dollar weakness. Euro, again, is trying to get back to parity again. But it can't really, it's still capped at that key level of 1.00089. Okay, so it's still capped there as it stands at the moment. The sterling, again, doing slightly better today as well, still benefiting from Friday's optimism. Currently trading at 114 handle. Like I said earlier on, in my first level I'd be keeping an eye on I know potential area resistance 115.50. Dollar yen still very range bound at the moment. Very range bound. Currently trading at 146.52. Really, the key for me to get it anywhere close to being bullish again would be 148.57 as a potential area of interest. Gold, again, benefiting from a weaker dollar, is trading above that level now, $1,667. Currently trading at $1,677. So again, like I say, at the moment we have got a weaker dollar. If you look at S&P 500, oops, lazy, that was close. If we look at the S&P 500, currently trading at 3,776 points. Really, the key for me here, first test, potential test for me will be 3,796 points. So like you can see, it was pretty much carrying on for now after Friday. However, don't forget, we've got some big events coming up this week, which could change everything. EU retail sales being one of them, but the big one is Thursday, and that's the US Consumer Price Index. So don't forget that. That's going to be massive. I will do a watch along. Will it shock us again? Last time it came at 8.2 and it's supposed to be 8.1, and core came in at 6.6 versus 6.3 that it was expected. So are we going to get any surprises on Thursday? So come and join me for that, because like I say, that could change everything of the current mood at the moment. Something else is coming up as well, which I want to talk about. And that is the next episode of the new Trading School series. Tixee Live presents Trading School. Now, this is going to be on Wednesday at 6 p.m. UTC. This topic this week is going to be behind the market, psychology of trading, a subject I'm really interested in. I'm always fascinated about, because I think a lot of people don't understand that when you're trading, there's a lot of psychological pressures on you, and you need to understand how to control your mind and your emotions when trading. So please come along for that. That's at 6 p.m. UTC. Now, don't forget, this not on YouTube. This is a special series. The link to this, to register for this broadcast, is in the description below. So please feel free to click the link, and hopefully I'll see you on Wednesday. Now, as the markets currently stand, S&P is currently trading, like I say, as we can see, in the green, is 0.39% higher. NASDAQ is also in the green, 0.34%, and Dow 30 is currently in the green as well, currently trading at 0.70%. Don't forget, you can ask me questions anytime you wish, or simply say hello. Or let me know your opinion, what you think on the matter. I mean, what do you think about Facebook losing 211 billion? Or investors losing 211 billion? I mean, that's them combined, of course, but still, that's a lot of money. And I think now I see the markets reacted positive to the potential layoffs, because obviously, like I said earlier on, it cuts their potential operating costs. But I still think this is an interesting story. And don't forget, it's back in, what was it, September, I think it was, or April, Facebook dropped out of the trillion dollar club. So yeah, I reckon there's more to it, and we're going to see more drama on Facebook in the future. Don't forget, if you think of a question later, you can put it in the comment section, either on YouTube or Facebook. I will see them, and I will reply to them next time I go live on air, which of course will be tomorrow morning, when I cover the European session. So please come along and join me for that. That will be at 9:30 UTC, 9:30 a.m. of course, UTC, and again tomorrow as well, around about this sort of time, which of course is about 3 p.m. UTC, to cover the US session. So please come and join me for that. If there is no questions, not a problem. If you're watching me on Facebook, like I always say, by all means, give us a follow. If you're watching me on YouTube and you enjoyed this little video, subscribe if you like. Hit the notification button so you know next time when I'm going live. If you enjoyed this video, found it interesting and useful, and you've put up with me, my over-the-top enthusiasm for the markets, I simply cannot help, then give me one of those. It's nice to know that you like what I do. Anyway, till next time, don't forget, these little videos are for educational purposes only, and in no way whatsoever should be taken as financial advice. So I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.